You can take money from one pocket, which might be 25, 35, 45% tax. You can rent out your house, and I'm sure there's rules to that, right? Yep. 14 times or less. So I'm assuming if it's over 14, you have to report it.
It doesn't matter. It only applies up to 14 days.
Okay. So 14 or less, whatever that rent rate is, your business could pay yourself, essentially taking money from this bucket and making it totally tax-free.
Yep.
That's amazing. This is BetterWealth with Caleb Guilliams. Hey everybody, we're going to be talking about how to make tax-free income with the Augusta rule. This is in our series with BetterWealth Tax. I'm here with Right Hand Dan, and this one's going to be a good one.
This is like every single business owner should use this, and here's why. The Augusta rule, which ironically comes from Augusta, Georgia,
okay,
because they host the Masters each year. Basically, this rule was put in place so that they could write off renting out their house each year. And so the purpose of this comes from IRS Section 280A. So this is right from the code, is that a homeowner can rent out their home up to 14 days per year without needing to report the rental income on their individual tax return. This is amazing. Why is this amazing? Because it applies to your primary residence or vacation home, meaning that I, as a business owner, can rent out my primary residence or my vacation home up to 14 days a year and take market rents. So let's just say it was $1,000 a day for 14 days. And I can pay myself that $14,000.
Yep.
That comes tax-free to me.
Yep.
And it also operates as a business expense to my business.
Yep.
So that is the general premise of this.
So in summary, you can take money from one pocket, which might be 25, 35, 45% tax. You can rent out your house, and I'm sure there's rules to that, right? Yep. 14 times or less. So I'm assuming if it's over 14, you have to report it.
It doesn't matter. It only applies up to 14 days.
Okay. So 14 or less, whatever that rent rate is, your business could pay yourself, essentially taking money from this bucket and making it totally tax-free.
Yep.
That's amazing.
It's incredible. And of course there are limitations to this, but what's really interesting is if for example, let's just say like we on a quarterly basis have the team come in and we have like our quarterly planning. Some people do that on a monthly basis. Some people do it annually, semi-annually, whatever it may be. Well, the premise of the Augusta rule is we host the team at our house, right?
Yep.
And so what we would basically have to do is go to like a hotel or a conference center or an Airbnb, whatever it may be, and say, okay, we have 15 people that are coming in. What would it cost to put them up in a room? What would it cost to have an event space for those people? What would it cost to have meals, Wi-Fi, taxes, like state and local taxes, all of those things? What would it cost to have those people for whatever set number of days?
Yep.
And so again, we'll use a round number that it's $1,000 a day.
Yep.
Well, you can then basically take a look and say, okay, if I have the team out for 3 days each quarter, well, you have them 12 days out of the year, and so you can pay yourself $12,000 and write off the $12,000 expense.
So here's my question: is where this can get audited? I guess is how much you're charging yourself.
Correct.
Because you can't just say, oh, I'm going to charge myself $30,000 because the value that this house and the aura that it brings. Like you can't do that. So I'm assuming it's number one. Yeah, I think that's probably the biggest thing is people are too aggressive with the quote unquote rent that they're charging.
Yeah, I mean with most things that it comes to the IRS, they talk about this idea of reasonable.
Yeah.
And reasonable is just looking at what is something that's comparable in your area. And this goes back to when it comes to taxes, it's things that are reasonable and documentation.
Those are key.
They're really two things. And so again, that's the whole purpose of going out to like a conference center, so you can get that quote and have them send you an invoice so that you have that documentation that that's what this would cost. And it's just an amazing, amazing way to be able to have that tax-free income. And again, there are some stipulations to this. Is like for one, your primary residence or the place that you do this in can't be also your primary place of business. And so this gets a little tricky, especially with the pandemic, because so many people are working from home. And this would be a talk to your CPA or whoever's doing your taxes. But that is one of the things is it can't be your primary place of business. And you also need to take some sort of meeting minutes, so it's like basically corporate minutes like this. We met these 3 days. These are the things that we talked about. And, just a good tip is to package all that stuff together, have the invoice, have the meeting minutes, and just put it all together. But what's really interesting about this rule is you don't even need a team to do it. You can literally do it yourself.
Yeah, it's powerful.
Like you could do it with your spouse or solely by yourself. You say, I'm going to meet with myself 14 days out of the year, and I'm going to charge a reasonable rate, and you can gain tax-free income that way.
So I think documentation and being reasonable, those are two things that we need to definitely lean in on. Man, that's crazy. I think the curveball is if your house is your work residence. Is this what if you're working remotely? I mean, is that anyone that's working remotely, would they say that their home is their business residence?
Yeah.
Okay. So this is not for everyone, but if you have a business and it's not your personal residence, or if you have a second home, right? This is a solid way to be able to, it's amazing. It's a solid
incredible
way to take money from taxable and shift it over to tax-free, and it can say it can be, that's a big deal.
It's a huge deal. And again, this goes back to this idea of reasonable. It could be, depending on your area, it could be $2,000 a day. It could be all kinds of things depending on how many people are attending. So, if it was $2,000 a day, 14, I mean, that's $28,000 tax-free income plus a business deduction every year. Like where else can you get a deduction and tax-free income in the same?
Yeah. I think a common theme to these episodes needs to be, don't sue us. Talk to your CPA. We are going to give you ideas to think about, but at the end of the day, this is not tax advice because we don't know your situation. If you are looking for someone to help you with your taxes, help you be more proactive, help you start planning instead of just prepping your taxes, go to betterwealth.com/tax. betterwealth.com/tax. We're going to be on a mission to helping people be more proactive, take back control, and pay legally as little taxes as they have to, because we believe that you can be a better steward and live more intentionally with more capital to do other things. Thank you so much for listening to the BetterWealth podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.